Hello, this is Brian Resney. It's question and answer day, and I can tell you from my TV and radio show both, we are receiving a record number of calls about interest rates now in bond investors. We're seeing a lot of investors overloaded the boat in bonds. I don't care if you're 80, you're 40, or somewhere in the middle. Most investors have too much in bonds in general, and they have long-term duration or intermediate-term duration bonds in their portfolio. Completely wrong for this environment. And one of the things I want to stress to every investor out there, don't think your broker is watching your bond portfolio. Your broker's job is to sell you investments. Now, your broker may be called an advisor or wealth manager, but brokers or advisors, most of these firms, do not manage your bonds. They want to sell the bonds. They want to have you buy bonds. Bottom line is this: you are responsible, if you have a brokerage account, for your bond exposure. Don't expect your broker to call you after your bonds are down 20% and you should have sold when I told you to at the beginning of this year. Interest rates are slowly moving up. General economies around the world are doing better. It's going to hurt bond investors. If you need to be a little bit more cautious, raise a little cash. Sell that long-term bond exposure. Sell that intermediate-term bond exposure, whether it's bond mutual funds, ETFs, or individual bonds. All bonds will go down when interest rates go up. You want to be short-term duration to protect principal. You will make less money, but you will lose a lot less money. Ultimately, your goal is to preserve that capital if you're trying to be more conservative. Also, utility stocks are getting hammered. They act like long-term bonds. Publicly traded REITs, real estate investment trusts, also are getting hammered. Again, we have been spot on discussing this throughout my TV and radio show for the last year and a half. I've warned investors you need to reduce your exposure to bonds, bond mutual funds, utility stocks, and REITs, real estate investment trusts. Anything paying higher dividends that is somewhat tied to interest rates will be hurt with bond values going down and with interest rates ultimately going up. If you're not a client of our firm, give us a call. Maybe it's time you became a client. If your advisor is not doing the right job for your portfolio, we'd love to sit down with you, do our 21-point analysis, and see if we can get you back on track in a proper manner. Make sure you have yourself a safe and profitable day.